Hi there. Thank you for joining us today for our Navigating the Home Buying Process webinar. We have an emphasis today on how to obtain a home loan. I'm Corby Gage, the Executive Director of Coastal Housing Partnership. And with us today is Kim Pasgage from the Coastal Housing Partnership as well. She's our Program Manager. And today's webinar features 3 local loan officers. We have Susan Budoff with Union Bank from Ventura County, and John McCuskey with Homebridge in Santa Barbara, and Martha Morales with Homebridge from North Santa Barbara County. So Susan, Martha, and John are all part of Coastal Housing Partnership's network. And as part of that network, these lenders reduce their closing costs for the employees of our member companies. So there's a nice savings when you're using them to obtain a home loan. So the format for today's webinar is I'm going to be asking John, Martha, and Susan questions about the process of obtaining a home loan and making sure that you are ready to purchase a home and you're in the best position to make that happen. The remainder of our time together will be to get your questions answered. And we hope that you came with some questions today. We're going to be recording today's webinar, so we can send you the link to the recording afterwards. And the webinar format means that we can't see you and we cannot hear you. So if you have questions, please put them in the Q&A at the bottom. You can ask your questions anonymously if you like. And Kim is going to be monitoring those questions. Put them in at any time you happen to think of the question. You're not going to be disturbing anyone. Go ahead and put them in, and then we will get to those questions at the end of our time together. And that's important that we respond to your needs specifically. So please do ask questions. Since the first step in the home buying process is meeting with a lender to find out how much of a loan you can afford, information you're going to receive today is going to make you much better prepared to take that important first step toward buying a home. And we really encourage you to see a lender soon. It doesn't really matter when you're planning to buy a home. You don't have to be ready right away. That's a really good readiness position to get into, is meeting with the lender and seeing the things that you need to take care of. So encourage you to take that step. So before we get started, we'd like to take an anonymous poll to determine who our attendees are today. Just wanting to find out, if you're a first-time home buyer, kind of when you're ready to buy, and just so that we can gear our comments toward your needs better. So just take a few moments to do that. Okay, Kim, does it look like we're pretty much everyone's done?
Just a few more.
Okay. Let's give you a few more minutes to get that, moments to get that done.
Okay.
All right, great. Thank you. So let's get started. Susan, would you please share a little bit about yourself, just to introduce yourself to our attendees today?
Sure. My name is Susan Budoff. I'll give you my NMLS number is 260969. I've been in the business for about 30 years, and I have worked as a mortgage broker, also in-house lender for about 12 years with Coldwell Banker, so very familiar with purchase. And presently, I'm happy to say I'm with Union Bank for about 3 years.
Great, thank you. John, would you please share a little bit about yourself?
Yeah, I've been in lending since 2008, and I started right out of college and have gone through various roles as both an assistant. I worked my way up to a sales manager role where I was responsible with opening branches and hiring loan officers and training them. And then eventually in 2012, I moved into the origination side, which is essentially doing the loan that we're talking about right now and originating them by myself. It's been fun to grow and learn and kind of help people along the way. Every day is a new challenge in this business, so it's been a great experience so far, and I look forward to a few more years, or lots more years.
Yes. Thanks, John. Martha, would you share a little bit about yourself?
Yes, good afternoon. I'm Martha Morales. I am with Homebridge Financial Services, and I've been in the business for 22 years. I've done real estate also, but I've chosen to just stay with being a lender. I love meeting people, and hablo español también. And that means to those that didn't understand, I also speak Spanish. My NMLS number is 260435, and that's just a license for us loan officers.
Great, thank you. And you can see all the contact information here for Susan and John and Martha on your screen. That will be there our entire time together. So as you can see, we have some great experience by our panelists today, and it's going to be a lot of really great information. So Susan, let's start with you. What can a potential home buyer do to best prepare to obtain a home loan? When's the right time for them to meet with a lender, and do they need to be ready to buy, or is it a good idea just to check in with them that just because you think you want to buy it down the road sometime?
It's never too soon. Even if you have an inkling that you may want to purchase, even in the future, it's a really good idea to sit down with a lender and meet with them and go over the type of documentation required, what you'll need to provide to purchase a home, especially for first-time home buyers. The mortgage lender can tell you what documentation to prepare. They will probably try to run your credit. It's a good idea to run credit at least once when you're preparing to purchase, so that you can see sometimes things come up on your credit you're not aware of. So it's just a good idea to sit down, take a look at the credit, take a look at your assets, and your income documentation to make sure everything fits, because it's really like a puzzle. Sometimes we'll hear, I have an 800 credit score, so everything should be great. Not necessarily. It still is a puzzle that you have to put together. You need the income, you need the assets, and you need the credit. So it's just a really good idea to sit down early on, and again, especially for first-time home buyers, to look at all that documentation and see where you fit and prepare what price range you should be looking in. One of the issues is if you own a home and you're going to sell your home, not necessarily for first-time home buyers, but if you own a home, you're going to sell that home and purchase a new home, it really is important to see a lender and see what your sale proceeds will be, so that you know that you have enough funds to purchase the next home, and feel secure about that. So bottom line, it's never too soon, and you need time to prepare, again, especially if you're a first-time home buyer. It may be a year out, or you may be ready at that time. Once you sit down with that lender, you can pretty well, put a game plan together.
So a lender's not going to say, oh, I don't want to work with you because you're not ready to buy right away.
I would say most lenders, no. And if you run across that situation, I would say shop around and find somebody that you're comfortable with. And again, it's not always about chasing rates, looking up rates and going to that lender. It's about comfort and trust.
Great. And it sounds like maybe it's a good idea just to check in with the lender to see what things you need to do in terms of getting your game plan ready to go, and what you need to do, so that would be a good idea.
Definitely, because a lot of first-time homebuyers are not aware that you need to look at the property taxes on a monthly basis. Even if you're not paying them monthly, you need to break it down monthly, see which, there may be a homeowners association. So there are other costs for that home that you really need to look at, and especially property taxes, because I find a lot of people are very surprised at what they're paying monthly.
Okay, great. Such good information, Susan. Thank you.
You're welcome.
Martha, so now someone's going to meet with the lender. I imagine they're asking for a pre-approval. Wondering what is a pre-approval and why is it important, and what's involved in that process?
Well, Susan touched on it somewhat, as far as the lender taking an application, checking the credit, a borrower's credit, which is important, and also obtaining the employment and financial documents, which would pretty much tell us everything about the buyer or the borrower. The reason why it's important, I'm going into your next question, but the reason why it's important is this way the borrower is going to have an exact loan amount, and it allows a borrower to look at for homes at or below that price level. They'll also have a better idea of what the interest rate would be. I mean, right now, interest rates, they vary. They're going to always be varying, but it gives them an idea of where they would or could be as far as interest rates. And this way that the realtors will show them only homes that they do qualify for. You also cannot get a realtor nowadays. You can't get a realtor to show you a home without a pre-approval. So the pre-approval is like a key to looking at homes that you're interested in.
Great. So is that pre-approval, is it kind of like a guarantee that that lender is going to loan you that amount of money? Is that what's the confidence level that someone has once they have that pre-approval?
Well, I believe that the confidence level is more of, it puts you in an advantage when you're dealing with a seller, because you're one step closer to getting an actual mortgage. There's never a guarantee on lending, because there's so many variables that could take place. And we always like to foresee that. That's why we want to meet with our buyers, and we just want to make sure that they understand what the do's and don'ts are of staying with your pre-approval letter, and staying pre-approved. So it's not, as much as we'd like to say it's a guarantee, there's so many things that can happen in life, but I believe that that one of the other lenders are going to be able to talk about that. I'm not sure if they will chime in on that, or but it is not a guarantee, only because, like I said, life happens. There's so many variables that can take place in their life. And sometimes they don't remember, they're so excited. And we just want to make sure that they understand that. I believe Susan had touched on, as far as taxes go, property taxes, you have to be aware of each neighborhood has its own tax rate, and that's kind of getting a little bit deeper into what tax rates or property taxes are. And that would be something that a lender could sit down and show you, because there is a lot to it. It's not just one time that you should be meeting with your lender. It should be more than once, because there's so much to lending that we want to inform you of. And this is a good part of it. This is a good start where we're at today.
Okay, great. And is there a cost to the home buyer to getting a pre-approval?
Most lenders do not charge a cost. I can't speak for every lender out there, but most lenders do not, and not an upfront. No,
Okay, so it shouldn't be an upfront charge.
there should not be an upfront fee.
That maybe is a red flag. If someone's trying to charge you, maybe find a different lender.
Right. And you don't give cash to anybody. Yeah, that's a big thing. Yeah, you don't give anybody cash because it's just not, it's not ethical, and that's not something that lenders do. We just don't do that. So yeah, that would be a red flag if they did ask you for that.
Okay, but they are going to run your credit score, right? As part of
Correct.
that pre-approval.
They need to, we need to see, your liabilities, what's going out monthly, what your monthly liabilities and responsibilities are. I don't know, I don't want to step over anybody's question as far as credit goes. So I'm going to let that person, on our panel, go ahead and answer that, because I don't want to answer something that, they already have to answer.
Yeah, John will give us a little more information on the
Yes.
credit score. So what other documents does someone need to bring you as a lender for a pre-approval?
We need their W-2s. Sometimes we need their taxes, their taxes that they filed. We need to make sure that they have been filing for the last two years. Sometimes, and I know that I believe that John's going to touch on this as far as, what the down payment assistance requires. Sometimes they do require 3 years, but as far as income documents, it's going to be W-2s, it's going to be pay stubs for anywhere from 3 pay stubs, 2 pay stubs, 3 pay stubs, depending on how you get paid. Also your personal information, driver's license, social security card. Also, we do take resident aliens. You have to have your legal residence. If you don't, we do accept DACA and the work authorization. And if you have any more questions on that, you can, I'll be glad to answer, or I know one of the other panelists can answer that too. But that would be what we would need.
Okay, so it sounds like you're looking at credit, income, and assets during that process, and debt during that pre-approval
Correct.
process.
Yes.
Okay, great. So helpful. I think that's a little overwhelming for some people. They don't really know what's going to happen in that, and it's really, a process that the lender's going to hold your hand through, and they're going to, make
Yes.
that easier for you.
Correct.
So there's a lot of conversation, John, about credit scores. We're always wondering about credit scores. So can you, share a little bit about why credit scores are important, how they're determined, and some of the things that might affect your credit score?
Yeah, sure. Thanks, Corby. Credit scores are kind of like a representation of your financial health, you could say. If your scores are high and bills are paid on time and balances are low on credit cards, you're going to have a great score and not have any issues getting a mortgage. Your rate will also be better on your mortgage, most likely, than if you have a lower credit score. So people often ask, okay, well, I've had credit, I have credit cards. Why would my scores be low? Credit scores are representative on the length of time that you've had credit, your payment history, so as long as payments are paid on time, and then also the amount of debt you have. So credit scores, generally speaking, 580 is usually as low as we can go for some programs. Anything over that, there is products available. If the scores are lower, we're going to look at ways to maybe increase them to get you into a better interest rate bracket or give you more home loan options. The higher the scores are, we may not focus on that as much, but I kind of look at it as something that you should check early and often, kind of like visiting the doctor. Don't be afraid. You need a baseline to know where your credit is so that you can kind of help game plan in the process. And then these days, most people have some sort of credit monitoring service, whether it's Credit Karma or a service that comes along with the credit card that you use, like Chase or Bank of America. I know I get little notifications every month. Check your credit score. Those should give you an idea of where your scores sit right now. But as lenders, and I think this is safe to say for all the panelists here, we're going to use what they call a tri-merge credit report. and it's going to show a credit score from all three of the bureaus, not just one. So if Credit Karma tells you you're perfect, I don't want to break your heart that your score might be a little lower when we actually run your credit. But that's why it's important to meet with the lender and have the credit run and kind of analyze what's on there to see if we can do anything to improve it or if you're in good standing as it is.
Is it a good idea to try to do something to improve your score before you meet with the lender, or is it generally best to let them tell you what you might want to do?
Personally, I think it's safer to meet with a lender first. There are a lot of credit counseling agencies out there. Some are good, some are bad. I think those are things that you would want to pursue after you have a credit report in hand and you can see what may be fixed. I think a common misconception too is that I don't want to run my credit because I have bad scores. Running your credit with a mortgage lender is going to be completely different than if you run it for, say, a car loan or a credit card. A mortgage traditionally is a good type of debt. You pay the balance down and the home hopefully maintains its value. Whereas a credit card, you can run the balance up every month and it's kind of viewed as bad debt. So don't be afraid to run it once or twice. Running it a lot of times is when you see scores drop a little bit too.
Okay. And is obviously there's things you can do to improve your score. Sounds like it's a good idea to talk to the lender first. I guess that's what you guys do all day long, right? Looking at credit reports and credit scores, you can identify some of the things that someone might change to improve their score.
Yeah, we have, there are a lot of kind of services that we have across companies. Most mortgage lenders will have this. They'll allow us to kind of tinker with the report and say, what if? We want the scores to go above 680, for example, or 700. And the borrower maybe says, hey, I have $2,000 I could use to pay down credit cards. What would be the best way to apply it? So we have credit simulators that we can use to sometimes help guide that. They aren't guaranteed to improve the score, but they're pretty accurate. So that's kind of goes back to how we can not counsel, because that's not really our job as a credit counselor. We're just here to help advise and coach people a little bit on things they can do to improve them when they're ready to purchase. Great.
Good. That gives us a much better feel for what's going on with credit scores. Obviously, it's really important in terms of your ability to get a good interest rate and to have a number of options available to you in terms of loans. So that's great. So Martha, let's go back to you. I'm always asked about first-time home buyers. Who's considered a first-time home buyer, and are there special first-time home buyer programs available? Can you share a little bit about that with us?
Yes. So on a first-time home buyer is someone who has never purchased a principal residence, or someone that is purchasing a principal residence for the very first time, or someone that has not owned a principal residence for 3 years from the time that they're going to purchase their new home. And that's the difference. So sometimes people that have not had a home for 3 years and then they decide to get a home, they think because they've had a home before, a principal residence, that they are not first-time home buyers, but they are. They would be considered first-time home buyers. And there's other little exceptions that there are to principal residence, as far as not being the 3-year mark, but that's something you get into where it wouldn't apply right now at this point for a principal residence.
So if someone had an investment property, they would still be considered a first-time home buyer because it's not a principal residence for them?
They would not be considered a first-time home buyer. They would not be considered a first-time home buyer.
If they have an investment property. Okay.
Because they have ownership. And even if they're not using it as a principal residence, they do have ownership as far as on a title.
I see. Okay, great. Now, are there certain first-time, home buyer programs available? Are there special loans? Are there income restrictions around those? What is someone, we're always saying, I'm a first-time home buyer. What loans programs should I be asking for when I go see the lender?
Yes, there are first-time home buyer programs, which I believe John is going to get into in depth. And the home buyer programs are restricted as far as income goes. And I'll let him talk a little bit more about that, only because if we, on some of them, they're, I'll let him talk more about that. I don't want to get into his, his answers on that. But there are income restrictions and there are credit score restrictions on that as well. So, each down payment program or each down payment assistance program.
Okay. But if you are a first-time home buyer, you should be saying to a lender, hey, I want to make sure I'm eligible for the first-time home buyer programs that you have.
Right. And most lenders check. If you are a first-time home buyer or not. It'll come up. It'll come up in our process as far as you being a first-time home buyer or not.
Okay, great. Thank you. Okay, John, back to you. Down payment, always a big question, of course. Do I need 20% down? How much do I have to save before I can get into a home? Are there, down payment, are there loans that I can get into with less than 20%? Share a little bit about that if you would, please.
Sure, absolutely. Well, there are a lot of options, surprisingly below 20%. Everyone's probably familiar or heard the term FHA, which is kind of a first-time homebuyer program. It allows you to put down as little as 3.5%. If you're a veteran, for example, and you have an entitlement, you can do 100% financing, so effectively 0% down. You would have to pay a little bit for closing costs, though. And there are down payment assistance programs, which are essentially state-run bond programs that will contribute the 3.5% in combination with an FHA loan. So 20% is a great number to hit. If you can hit 20% down, regardless if you're a first-time home buyer or not, that's awesome. But most people we deal with, to be honest, are probably putting 5 and 10% down. Now, depending on where credit scores are, as Martha was mentioning, you may not be able to access all of those programs, but most of them are very flexible on that. And some of the lower down payment programs and the bond programs are income restricted as well, as she was mentioning. So the down payment, it can come from a lot of sources. It can be checking, savings, retirement accounts. You can borrow from a 401k. It's okay to get a gift from family members. There's a lot of sources that we can use. It's just mainly letting us know what you have available. And then when you combine that with the other factors we've discussed prior, fitting you into a loan product that best fits you. Just because you are a first-time home buyer, maybe FHA isn't the best option. Maybe you can do a conventional loan that might fit you better. Or maybe the VA is something you weren't aware that you had the entitlement for since you're a veteran. So that's kind of where the meeting comes back into play of picking the product that best suits your needs, since every borrower is truly an individual and unlike the person next to them.
But someone shouldn't wait until they've saved 20% down to go meet with the lender. They should check out and see what loan options are available to them.
Absolutely.
Okay, because they may be ready to buy sooner than they think. Seems like that happens a lot. We're talking to people who say, well, I'm not ready. And I said, well, just meet with the lender and let's see what's out there for you. And there might be a loan that makes sense for you.
Yeah.
So
doesn't hurt to ask.
Yeah. Now, do those vary by lender in terms of these low down payment loan programs? Is that something that, is that something that someone should ask when they're checking with the lender?
Yes. Yeah, not every lender is going to do the down payment assistance loans, the bond programs. That's going to be specific to certain mortgage lenders. FHA and VA are pretty much unanimous across the board. Most companies will do them. Same with some of the 5% or 3% down conventional loans. It really depends on the lender that you call. If you call an online lender that you just picked off an advertisement on Google one day, they're probably not going to have the full selection of all the low down payment options. So just when you speak to someone, make sure you ask that question if that's a product that you're trying to fit into.
Great. Thanks, John. Well, that brings us into Susan's question about how to select a lender and what to look for in a lender and how to choose a loan officer. It sounds like maybe one of the questions to ask is kind of low down payment loan programs do you have?
I'm sorry, do you mean us specifically or?
No, but when someone's interviewing for a loan officer, should that be a question that they ask kind of right
Oh.
up front is, do you have low down payment loan options?
Oh, absolutely, absolutely. Because there are so many different programs and some are census driven, area driven, some are income driven. And if if you fit into one of those, definitely should be taking advantage of it. Yeah, definitely.
Great. Well, so how do you select a lender, Susan? What should we look for, when we're picking a lender or talking to people? And do you check by rates, or are there other factors to look at?
Choosing a lender is, I think I mentioned it previously, is really not about chasing rates. It's really about finding somebody that you're comfortable with and you trust, possibly getting a referral from a friend or a family member that has recently done a purchase or a refinance. Find somebody that you get a referral from. Check your local bank and even local mortgage brokers. My feeling is somebody that you can sit down with, again, especially if you're a first-time home buyer. And then develop a relationship with that person. And as you move through the process, you will become, a lot of times you become very good friends through the process. But somebody that's going to look out for you and that you trust. And a lot of times we just have to trust our instincts. And just having somebody local, I think is just really a benefit to a home buyer. So it's not only about rates. Choosing a lender that'll go over payments, programs, what you need to bring in to qualify. Somebody that'll really go over the parameters. And again, I mentioned it, but letting them know that they may need reserves. They may need money in an account after they close escrow, not the down payment or closing costs, but they may need additional funds after they close, depending on the program. So I think it's about finding somebody you're comfortable with and putting a game plan together.
Okay. And is it a good idea to check with friends or coworkers as to who they've used, or what's your take on that?
Yeah, absolutely. I think that's probably one of the first situations I would look at, because if somebody has already gone through the process with a lender, that's a really good referral. That if they had a positive experience, I would think you would expect the same. So that is probably one of the first inquiries I would make. And then whoever you bank with, I think going to your banker is also positive. So definitely referrals from coworkers, family, friends is probably the first step.
Okay. Sounds like it's a bit of a chemistry thing too. Is it like, are you really connecting with that person and trusting them and feeling like they're going to be your partner through this deal?
Exactly. And that's what I was saying. A lot of times you create a bond with this person, and hopefully we are your lender for life, and for whatever you do presently and in the future, and just trying to create a good good relationship with that person.
Great. You mentioned briefly online lenders. It seems to me like I don't want to steer anyone away from that, but that can be more challenging to do in terms of having someone be responsive, or especially when you're in such a competitive market, that it's better to have someone locally that you could actually just walk into their office if you need to.
I think so. Yeah. And that's why I think I mentioned, local. I think local's very, a good idea, because you can walk in, meet probably as often as you need to. And sometimes, especially on first-time home buyers, you really need to spend a lot of time explaining the process. So that we as lenders want to make sure that they understand there will be closing costs, there, again, reserves, or what it means to actually go through the process. And letting them know, it's not just the two of us. A lot of times there's two realtors, there's an escrow company, there's a title company. There are a lot of people involved in the transaction. So, just you really need to sit down and go over all of it.
Great. Thank you. Well, this is such a great foundation for us to have. It looks like we have a lot of questions, Kim. So let's go over to the questions and see if we can get some of those answered.
Yeah. Thank you everyone for your questions. It's wonderful to see the response. So the first question here is, what's the difference between obtaining a home loan from a bank versus a savings and loan? Is one easier to obtain? And are the qualifying requirements the same for both?
Susan, would you like to take that one?
Sure. Most of us are underwriting to, if it's a conforming loan, we're underwriting to Fannie Mae, Freddie Mac, which set the guidelines for conforming loans. So I would say it should be pretty close in documentation. Basically, the guidelines are set. So the underwriting should be about the same. The rate may be a little different, and that's what you want to look at. And I think one thing we didn't touch on was points. Sometimes you can see the same rate, but one lender may be charging 1 point, which is 1% of the loan amount, which increases your closing costs a bit. So I don't know, John, Martha, I don't know, but my feeling is for most conforming loans, the guidelines should be pretty much the same.
Okay, great. John, Martha, did you want to weigh in on that at all, or did you feel like that?
No, I agree. I agree with
Yeah.
what Susan's saying.
Okay.
Yeah, I would agree too. The only variance I think is, I'm not sure if the question that was asked, they said savings and loans. So I'm assuming they might mean credit union. For example, most people are familiar with a Union Bank, a Wells Fargo, a Bank of America. And then Homebridge, for example, the company that Martha and I work at. What Susan said is accurate. If you do go to a credit union, oftentimes they will have their own underwriting standards because they may not be selling the loans to Fannie Mae or Freddie Mac. So they're a little bit different. They are a bank for sure, but they may have some slightly different rules. But we're all within a very close set of guidelines to follow.
Good.
Corby, we also have, I didn't want to complicate it, but there is something called portfolio loans. And we have portfolio loans, and mortgage brokers have access to the same. And they are basically in the bank's investors. So it does not go through Fannie Mae, Freddie Mac. It basically is our own guidelines.
So a borrower would do that if they have a little bit of an unusual circumstance, or maybe self-employed, or some things that may not fit the guidelines exactly.
Right, or it could be a jumbo loan that fits into that program.
Okay, great. All right, Kim?
I believe we covered this, but does it cost money to meet with a home lender?
No, it doesn't.
No, right?
Yes,
No.
it doesn't. So definitely take that step and meet with a lender. You're not going to see any charges until you are ready to, you've made an offer, and then I guess the next step would be get that appraisal would be your first fee that you would pay. So no, you wouldn't see any charges to meet with the lender.
Yeah. So see a lender. So the next question is it advisable to get pre-qualified with my spouse if one credit is better than the other? And what impact will that have on the amount?
Martha, do you want to take that one?
Sure. As John mentioned earlier, we do use a tri-merged account, credit score. And each bureau that we use, whether it's TransUnion, Equifax, Experian, you have scores from each one of those bureaus. And we use the middle score for each person, but it's always the lower of the middle score. So whether your husband has a lower or higher, we'll still go with the middle lower score of the two of you. So it wouldn't matter whether he had a higher score than you did or you had a higher score than he did. It's always going to go with the middle score, the lower middle score of all three bureaus.
Okay. Great, thank you.
Mhm.
Great. And then this one says, my husband and I are working, but need help building credit. Should we wait to meet with the lender? And I hope you've taken from this panel that you should meet with the lender sooner rather than later.
Right.
John, do you have anything to add to that? I think that's right, Kim. Yeah, go and meet with the lender. Absolutely. And just trying to figure it out. But John, anything to add?
And the lender could advise you on the best way to build credit, right?
Yeah, I mean, there's a couple ways to do it. And we would run a credit report, obviously, to set the baseline. And I've seen credit reports that come back with nothing, just blank pages, a name, address, and a social. And I've seen people that have 25-page long credit reports. So for people who don't have credit at all, probably one of the things I would recommend doing is going to your local bank and getting a small credit card and just use it to pay your gas. You know, swipe it, fill up your gas tank, pay it off, and just do something like that, something simple. Also, you can be added as an authorized user to, maybe your parents have had a credit card for 30 years and have perfect credit. They don't have to give you a credit card, but if they add you as an authorized user, that's one way to put long-term credit history on your report. So those are two simple things you can do to kind of add some more credit history to kind of make your profile a little more robust.
Great. Sounds good.
This next question is about, is there a target credit score number? This person is getting a loan with her husband and daughter, but so far the daughter is the one that has a good credit score. Is there a
There's kind
target?
of a minimum credit score? Is that what you think they're
I
saying?
think so, yeah.
Okay, John, you're our credit score guy. You want to take that?
Traditionally, 580 is going to be about the lowest that people are going to lend to. There are a few lenders out there that, I'm not sure if every program Susan has, for example, but some will go lower on VA programs. But generally speaking, 580 is going to be about as low as you can get.
And would it be better? What would be a kind of not the perfect score, but what would be a good number in terms of having a number of loan options available to you?
620 opens up quite a few more doors. Okay. 680 and then 700 seem to be some other benchmarks that really kind of improve things. So I would say if you wanted to bracket it, 620 or below would be a low end. 680 to 720-ish, middle of the road, and then 740 up, plenty of options.
Great.
And then this one is, how much debt is acceptable in order to get pre-approved, or do loans require zero in debt?
Okay. Susan, would you like to take that one?
Sure. Once we run the credit and see what debt is on the credit report, we look at the income, and then we look at the monthly payments from your debt, and we create something called debt to income and percentage. And we as lenders, let's say we may not want to go over 45% per that lending program. So it really depends on how those numbers come out on your debt to income. If you have a lot of debt, but you have high income, it may be fine. If you have, let's say on the lower side with a lot of debt, that debt to income ratio might be too high. So again, like John said, really important to run the credit see how much debt is on there and calculate that number. And then you can go from there. So I mean, it really doesn't matter. It's as long as you qualify based on, compared to your income. John, do you agree or?
Yeah, it's based, you nailed it. I mean, people could have $1 million in debt. And if you can afford all the payments and your new mortgage and you qualify, that's fine.
Right.
Obviously, less debt, the better.
Yeah. Yes.
From my experience, it seems like what people perceive as a lot of debt varies so dramatically. Someone may say, I have $3,000 worth of debt. It's just outrageous. Someone else may have 30,000 and say, well, I only have 30,000 of debt. So everyone's perception of that is different. So check with the lender to see how that all fits into your picture, as our panelists are saying, and see what makes sense there. I've seen a lot of people try to pay down some of this debt before they go see the lender, and they're using up a big chunk of what could be used for their down payment. So check with the lender first, check with them to see, is this an acceptable level of debt? How do I fit into this, this lending picture, and do that rather than try to figure out something on your own.
I'd like to chime in on something,
Sure.
Corby, is we have to be careful as far as like not closing accounts. How some buyers think, okay, you know what, I'm going to pay all my accounts off, and then they close their accounts, or they go and they open accounts. If you don't have a credit score, I don't want to, this is not contradicting what John said by opening an account. But if you don't have a credit score, it's not going to matter if you do open an account. But opening and closing an account is not, it is going to affect your credit score if you have one. So that's why it's important that you do meet with a lender first, so they can go over all that with you. But sometimes, people do think, I think when we get to myths, that's one of the things, I have to pay all of my debt off, and then they close it, or the creditor closes the account because they've paid it off. A lot of that is like with your installment loans, which is your auto loans. I'm going to pay my auto loan off. Well, the creditor, the auto loan is they're going to close your account, and that's going to impact your credit score.
Good point. Thanks for bringing that up, Martha.
That is a huge point as far as closing accounts. I'm so glad you brought that up.
Yeah, I think a lot of times people think, well, I shouldn't have all these credit cards available to me, and a lender's going to think I can use these, and I better use them. So cut up the cards, stop using it, but don't close the accounts.
Right.
Okay, so our next question is, if do first-time home owners typically get higher interest rates? These people have a credit score of 800. Would that impact their interest rates?
That they have a good credit score, but they're concerned that
They're just asking,
first-time home buyer.
Would that mean they get a higher interest rate?
Martha, do you want to take that?
Would they get a high? I'm sorry, I wasn't understanding. I'm not understanding the question.
I think the question is that they have a really strong credit score, but they're a first-time home buyer. Because they're a first-time home buyer, do they have to pay a higher interest rate?
If they're a first-time home buyer, they will not have to pay a higher interest rate. So your credit score is going to tell the lender what interest rate you're going to qualify for, and also your down payment assistance. As John mentioned, you can go anywhere from 580 all the way up to 700, but each score falls into a bracket of your rates. And so with a down payment assistance, they have their credit scores that they want. So if you have a 580, you will not get the assistance that you are desiring, because they want to see how you manage your accounts. They're looking at your account history. That's the reason where the credit report comes in, right? How you manage your accounts. And so the better you manage your accounts, the higher the score you get. If you're at 800, oh, that's great. You know, it's great. On an FHA, it's not going to matter. But on a conventional, it will matter how much your credit score is going to be. And also, we haven't mentioned is mortgage insurance, but that's a whole different, you know what I mean? That's kind of getting deeper into the process. So, you know, but it is going to, having an 800 score is going to give you a better rate conventionally in the conventional program. And it's also going to give you a better mortgage insurance rate.
Great, good, thank you. Now, and just out to our group of attendees, if we are misunderstanding your questions in any way, please just pop it back into the questions and we will modify it if you have some kind of a clarification in terms of what you were asking.
Okay, we still have a lot of questions. So this one is any available assistance for refinance in order to remodel?
John, do you want to take that?
Sure. So on the assumption that you own the home, since you're refinancing something, there are two, maybe three ways to go about doing that. Most people put it on a credit card, which has a high interest rate. They drain their savings account or any other factors. I don't always think that's the best way to do it, obviously. And it's going to depend on the extent that you want to remodel your home. If you need $5,000, don't touch your existing mortgage. Find another way to get $5,000. If you want to do, say, $100,000 remodel, you can take cash out of your home through a refinance. You are going to get an entirely new mortgage. Now, with the way your interest rate looks on your current mortgage, we want to compare the two to see if that makes sense. And then lastly, the option that seems to be more popular these days is either a fixed second mortgage. Sometimes they call them a piggyback mortgage. That would either be a fixed payment or an equity line, which is a credit line. That kind of be visualized as a credit card that's tied to your home. You can draw money out of it, do the remodel, and then pay it down, and draw it back again. So there's really kind of three ways to look at doing that. All of them are totally viable. It just depends on the scale of the remodel that you want to do and how much money you may need to do it.
So just sit down with the lender and have them run options for you.
Yeah, exactly. Compare the cost benefit of each and see which one makes sense.
Okay, great.
This next question is, can county employees obtain better rates at certain lending institutions or any other credits for being a county employee?
See, Susan, do you have any thoughts on that, or is that a question that we need to check with someone in HR on and get back to this individual? What's your take on that?
Yes, yeah,
Okay.
I think we do have something called us at the bank, an affinity program, and we work with certain institutions, but they're predetermined,
Okay.
approved. So we do have that. If they were in that affinity group, yes. But yeah, that was something we'd have to check on.
Okay, if you were asking that question, would you please shoot a chat or a question to Kim and let us know your contact information, and we will get back to you on that.
You can send it to the host and panelists if you want to do that. And then can you please elaborate on borrowing from a 401k? And is borrowing the same as withdrawing?
Susan, do you want to take that 401k question?
Yes, we have a lot of borrowers accessing their 401ks or IRAs. The first thing to do is to check with your advisor and find out what your particular, especially with 401ks, what your particular program allows, because it can vary. So there are two ways to do this. The first would be taking a loan, and you're paying yourself back with interest. And usually it comes out of your paycheck, your loan payment, if you're presently working. And the other option would be to take the funds out of your 401k, and at the end of the year, you would be paying taxes on that money. And we always ask you to check with your accountant first prior to that, if you're going to do that. But step one would be check with your plan advisor, and step two would be talk to your accountant. But definitely, we have a lot of borrowers accessing their retirement accounts.
Okay, great, thank you.
Mhm.
And then someone's asking if someone co-signs for them and they're a first-time home buyer, would they still be eligible for first-time home buying loan programs?
I'm thinking they're meaning that that individual is not a first-time home buyer, the one who's
Right.
co-signing with them.
Yeah.
Martha, can you take that?
So from what I understand is you cannot, there's only one program that would allow a co-signer if they're a co-signer. So a co-borrower is one thing and a co-signer is another. A co-borrower has their own property. They're not going to live, if it's a non-occupying co-borrower, they're still, and they own a home. It's still not considered a first-time home buyer because one of the buyers do own a home. But there is a down payment assistance that does allow for a co-signer if they're not going to live at the home, and they can have access to that program as a first-time home buyer.
Okay, so some possible options.
Some possible options, yeah, not
Okay.
very many.
Okay, great.
The next question, is there a difference between a broker and a lender, and what are the pros and cons of both?
Mm.
John, can I throw that one over to you?
Sure. I think there's 3 easy ways to categorize mortgage lenders so that people can know what type of company they're working with and what type of lender they might be working with. A retail bank is going to be somewhere where you walk into and make a deposit and that offers mortgages. So similar to where Susan works, Union Bank, a lot of people have checking accounts there and they offer mortgages. And that's a retail bank. There is a mortgage banker. That is a company like Homebridge that Martha and I work at. We don't do anything except mortgages. We lend our own money. That's why they call us a mortgage banker, meaning we fund all the loans in-house and underwrite them. The third is a mortgage broker. And a mortgage broker is essentially going to take a loan application and they are going to shop that around to various other lenders, and they will take that loan package and effectively pass it on to that bank or the ultimate entity to underwrite and fund the loan. So the broker is acting truly as a middleman. There is no perfect one. They all work well and have their own scenarios. It just depends on where, the 3 of us choose to work. I like the company I work at, and I think the same is for Susan and Martha. The way they work and the speed at which they work is going to be different on every single one of them. So that's why we recommend contacting multiple lenders to get a feel for the person and the way that they operate and to see what their rates and products are like.
Great, thank you. We are at time. So here's a couple options. If any of you who have joined us have to sign off, but are still interested in hearing some of these questions, we'll of course send you the recording so you can hear them that way. If you can stay on with us, great. We will go on until we have finished our questions, as long as our panelists are able to continue on with us. Are you guys have a little bit more time?
I do.
Yeah,
Okay.
I'm fine.
Great, well then we will keep going because it looks like we still have a number of questions. And again, if you have to pop off, don't worry about that. We'll send you the recording. Okay, Kim.
Yeah, and then I do see looking for special programs for UCSB, so we can look at that and pass that information along. The next question is about refinancing to pay off your parents' loan who has passed away if you have inherited the home.
Susan, refinancing to pay off your parents' loan because you are going to be inheriting the home. Is that right, Kim?
Yes.
Okay.
So I
So someone's
guess
wanting to refinance the loan that the parents have because they want the loan in their name, it sounds like.
yeah, Yeah, that would be absolutely fine. It would depend how it's approached. Is it in a trust? Are
It
they
looks,
on title
it looks like they have inherited this property.
already? Okay, so they've inherited it probably through a trust or legally. So yes, absolutely, they could refinance it in their name. And that should not be a problem. Either if they're living in the home, owner occupied, or as a rental property, if they're going to rent it out. Depends what they're going to do with the home. But that should be fine.
Could they maintain the loan that's on the home now? Is that something they could keep that loan?
I believe so. I believe so. Yeah, I think, yeah, just continue to make the payments.
Okay, great.
Great. And the next question is if this person and their spouse get pre-qualified, does that give them access to higher loan amount? If both
Both are going to be on the loan.
Yeah.
Okay, Martha?
Usually it does. It does. I mean, you have two incomes there and it does qualify them for more, and then, of course, we have to look at the credit score because like I've said, I said once before is there's variables. So, if that person has a lower score but earns more money, we still have to look at it, that variable of having a lower score and where the interest rate would be. But yeah, it does. Usually two incomes is always going to help.
Okay. All right.
And then almost there. So are there specific lenders that they can contact who have experience with Cottage Health's mortgage assistance program?
So I believe both Homebridge and Union work with Cottage's mortgage assistance program. So there is a list of lenders that work with the mortgage assistance program. And it's important that you're working with a lender that knows how to do that, because there's certain aspects to that loan that some lenders will go down the road and get you approved and then find out there's a constraint on that second mortgage that doesn't work for that lender. So I know both Homebridge and Union Bank do that. We also have a list of other folks who do that as well.
Great. And our last question is, can you review down payment assistance, and what is that?
John?
Sure. Down payment assistance could probably be answered two ways. One would be like a gift from family. That's technically giving you assistance for your down payment. Traditionally, though, it usually comes in the form of a second mortgage, a grant program, a state-run bond program. And those are essentially acting as a way to supplement the down payment in addition to the mortgage that you're getting. So for example, the most common one, Martha can speak to this, I think she's probably done more than me. There are a couple state programs, Cal HFA, Golden State Platinum. They essentially offer the 3.5% that you may not have in hand, in addition with the FHA loan, to make 100% of the down payment. Martha, can you talk to those a little bit? Have you done some more of those?
So you mentioned the Cal HAFA, which is a Cal HFA. It does have a couple of programs. You have the ones that do cover not only the down payment, but some of the closing costs. The grant it varies, because the grant, the Golden State Financing Agency, they have two different. They have what's called an open doors, which can be a second on your home, and then it can be a gift. And then they have the grant, which is forgiving. It's forgiving after 3 years. So I think you could talk to any of us that have access to those grants, and we can go into more detail on that. But because there's a lot to, the credit score, the income limit, and what access, who would qualify. And we do have, excuse me, CalHFA is the one that allows the co-signer. Also, the grant, the GSFA, has a HEROES program that, you had mentioned before. It has a HEROES, and that is open to anybody like a fireman, police officer. We call them HEROES, the nurses, doctors, all of those that are in the front lines. So they designed something for the heroes of our city, county, state.
Now, but CalHFA is generally income restricted. Is the HEROES program income restricted too?
No, the HEROES, it is not income restricted. Well, I don't want to say it's not. It is in a sense, but here's the thing. It's not as much as income restricted as it is debt to income restricted. So the other thing being is if you use FHA is not income restricted. It has no restrictions. FHA has no income restrictions. But so you can go with that on some of the down payment assistance. So there's just so much to get into. It's kind of hard to explain on a yes or a no. There's other things that we would have to look at because, like I said, each one of them have their debt to income. Each one of them have their credit limits, their credit score limits. And so, we'd have to take a look at each person individually and see which one they fit on and see what they want. Because we do present each one of us lenders would present what access we have or what access they have. And, the best thing that we all say as lenders is, the more information you have, the better the decision you can make.
Okay, thank you.
Mhm.
Kim, any other questions come in?
Actually, I think we're at the end of our questions. Yeah.
Okay. Well, panelists, thank you so much for staying on over time with us. And it was a great group of attendees and wonderful questions. And I think that the information you shared is going to help them on their path to home ownership. So thank you so much. And thanks for joining us today.
Thank you
Thanks,
for having
Corby.
us. Thank you.
Thanks, Martha. Thanks, Susan. Thanks, Kim.
Thank you. Thank you all.
Thank you. Bye-bye.
Okay, bye-bye.